Well, welcome to this carrier update brought to you by Powerfleet. I'm here with the Sultan of Sonar, Zach Strickland. Zach, what's going on in the carrier world?
And I don't know about you, Anthony, but that blender, I got intrigued. I haven't had a new blender in, I think, 20 years.
I didn't want it until I knew it was Mike Vincent's. I didn't want it until then. Now I need it.
Nice. We got the tender rejection index and the tender volume index behind us here. So a lot of debate in the space about what's actually going on with volumes. Tender volumes, of course, the electronic transactions with shippers sending requests to carriers saying, can you cover this freight that we have a contracted rate agreement with most of the time? There are some spot volumes in here, but very minimal. But you have to have something else set up in your system to tender something because there's no rate in that transaction. So you have to have something on the other end that the parties have already previously agreed to that says this is a rate that this is going to get hauled under. So it's very contracted heavy freight right here. So this is all tender volume requests for contracted freight. The rejection rate, of course, when the carriers don't want to cover it under the contracted rate. When this rejection rate goes up, spot market rates increase. When this goes down, spot market rates tend to fall in the near term, of course. Now, over time, there's different trends and all sorts of other relationships there that we'll get into later. But the tender volume index dropping along with the tender rejection index. Now the tender volume index has fallen a little faster than the tender rejection rate because we were on Easter week. Tends to have a little bit of, it stalls out a little hesitancy. We normally see a little bit of an increase in the tender rejection rate, but we're in this transitional cycle with the freight market. So it is still falling, but at a much slower rate than it was before. 10.43% today, and that is, it's still what we would have normally considered high, but it's very low considering we've averaged above 20% for the majority of the last, say, 18 months or so. So a big drop in the tender rejection rate over the last month and a half or so, and that continues to be the case. I dare say that we probably will fall below that 10% level next week. Especially once we clear this Easter situation and seeing those tender volumes drop, Anthony. I mean, we're down below just under 12K on the tender volume index. So it's, the closer we get to 10K, which used to be the normal, it's just easing the pressure. So we've got a little bit of capacity, obviously, that's been added to the space over the last 18 months. And really a majority of that just started happening here in the last, several months or so.
Yeah, Zach, when we're looking at this, it's interesting because each individual movement kind of tells its own story. Sometimes you'll see both moving in unison, sometimes you'll see one going up, one going down, but each movement that you see tells its own story. When you see this downward movement in both of them, it really kind of shows what's going on in the market right now.
Yeah, and really, the accepted volumes, if you did the math on this, like 1 minus OTRI times OTVI, we're just now, actually we're flat if you consider that it's Easter week. If you compare the two Easter moments to each other, we're actually dead even in terms of accepted volumes in the market. But if you go back a week and look at mid-April volumes, which is probably more representative, we're about 2% lower on the accepted volumes than we were this time last year, which is actually the first time that has happened over the last 12 months. I think the previous time was around January last year when we had actually before the winter, the Texas freeze happened. But that's an indication that now the carriers aren't just necessarily, they're missing out on those spot volumes, which have contracted quite a bit. Now they're starting to kind of get into that contracted volume space. So it just depends on your mix as a carrier. If you've been supplementing your network with with 20, 30% spot market transactional freight, it's going to hurt. But if you've been building up, some of these contracted, spaces, you're going to be a lot more hedged in this environment, especially if you've managed that relationship inside your network. Now, I know it can be hard to turn down some of these spot rates, but they're getting closer and closer to that contracted threshold. So, especially out in LA, which I believe we've already kind of almost hit it, right. where the saturation in that space has already made a big dent. Let's look at the next chart real quick. And I probably want to talk about this, save a little bit of this discussion for the next segment because this is a big deal. This is the van contract rates going up. They stayed sticky down in the blue line right here. They've stayed sticky throughout April, and this is what we would expect to see. Now, the big question is, how quickly are the shippers going to start, especially as these tender rejection rates and these spot rates, you see $3.02 a mile on the all-in truckstop.com rate, $2.94 on the our average base rate index. So technically, if they had the same exact volumes underneath them, they would actually be, we're already below contract rates, but they're not the exact same lanes, the exact same mix or anything like that. So, but it is indicative that we are going to fall below that contracted threshold here shortly. And when that happens, these tender rejection rates could just plummet even further.
Zach, this is an intriguing chart. Excited to get to this one in the next carrier update. Thank you so much for this one. We'll check in with you again. Right now, we're going to toss back over to Kaylee Nix and Michael Vincent.